Hey, howdy everyone. Hope you're doing well. Tony here. Today I'm just going to be going through some tickers in my watch list. We're going to be doing some updates. We're going to be doing some fresh setups I'm watching. All this kind of relies on how the markets are going to play and fare next week. We are at the start of a new month. Things can get a little funny around a new month. And we got all-time highs on ES, and we have the dollar doing its thing as well. I go over that a little bit more in my Bitcoin video, so if you haven't seen that, I definitely recommend going and watching that. With the caveat out of the way, let's go ahead and dive into these charts. So on NEAR, we were watching as NEAR was coming up in a potential wave 3. We were looking for these levels to play as an area of resistance, and hopefully when it decided it wanted to retrace, that they would play as support and continue on and move up and away from these wave 2s down here. So far we've played out in that fashion, but now we're at the decision point where NEAR has to decide if we're going to send it back up for another wave 5 past the $3 mark, making this impulse look nice and pretty, and we can continue on and hopefully hold these levels of interest as support as it goes back up. Bears, right now we're looking for either continuation to the downside coming back to the 182, which would make this impulsive idea a little more ugly, and we might have to reconsider the count. Or if we end up bouncing off of here correctively to this level, there is a possibility that this was done. We're going to correct up, and then we're going to head back down, either impulsively past the new lows or for a larger degree correction. Again, these levels are going to be key as this chart develops, so keep an eye on them. But just because we have a wave 2 that's so small, we really want to see this wave 4 fire back up. If we end up breaking down, again, we don't want to end up turning out looking like SUI. SUI, we were looking at this to pump up and then hold these levels of interest as support for possible continuation, so we get a nice, good-looking impulsive move to the upside. Obviously, that didn't happen here, and these levels of interest, as they broke down, ended up turning into resistance. So that's the same kind of thing we're watching for on NEAR. This was a pump and dump. Obviously, it's over now, and we're heading back down. We don't want that. This has a little bit more narrative behind it, being AI and all that. So if we can hold out here, should be okay. If not, I'm going to lean more to the bearish and SUI side of things. That's the read for NEAR. Let's go ahead and move on to MSTR. On MSTR on the 4-hour, we've been watching this since back in this area, and the larger degree, it looks like it's putting in a pretty good inverse head and shoulders look to it, with the major resistance line being between 180 and closer to 200. If we can move back up there, I think that'd be a good look for a break, and then I'd be watching for the correction back to it for an inverse head and shoulders kind of completion. The trick is for the bulls to push us up that high to begin with. So down on the lower degrees, again, I think we have a potential for A, B, C, or a 1, 2, 3, this being the 1, 2, then we're going to head up for the 3. But right now, looking at the smaller time frame, I think we have a nice looking potential impulsive move to the downside from the $200 area down to the 150, which we were watching for and anticipating. Didn't end up breaking the 156 pivot, which concludes this as a potential impulse, in my opinion. And now the bulls kind of have to prove that this is going to be the jump off point at 150. Right now, off of the 150 area, we only have a 3-wave move to the upside. So in the next couple of days, I'm going to be watching for how this little guy finishes here, and if we're going to complete in an impulsive move to the upside. So when we see an impulsive move, we always want to look to the left to see what it could be attached to. If this is an impulse, another impulse following, breaking the pivot of the potential wave 4 here is not the best look. Of course, we could always just send it up, but I think at this point we have to watch, first of all, if price can complete an impulsive move up to this point. Otherwise, we could just roll over. But really, the bulls want to come back up and break through 169 and get to 181 as soon as possible in an impulsive manner. If we end up coming up corrective and correcting back to this area of interest, I think the likelihood of a rejection rises. So I'd be watching for that to play out. Again, this has been playing pretty technically, with the anchor being this nice little zigzag here. So just as long as it keeps playing technically, I'm going to keep believing what it's telling me. And right now it's saying that the bulls have to hold 150, break 169, whip it back into support and send it back up and break some of these higher levels and send it beyond it. If not, a rollover from here, an impulsive move up, and then we'll be watching for that C3 setup down here for a potential corrective move, something like that, and then we get a correction down. Those are the two paths I'm watching. Let's move on to the next one. All right, on MSFT, we were watching for this level to hold at 398 or 400. It did dip into the 50, but it didn't really complete the most ideal fashion. Typically, we want the wave C of a zigzag to go past the move of the A wave or the end of the A wave. Could be because this was so quick, or this is so bullish that it's going to be sending up. But going off of what is printed here, I think we have a potential for it to be a 1, 2, or an A, B, and we're going in for the C or 3 at this moment. So far, we're looking good for the bulls. We have a 1, 2, potential 3 coming in, and it's all going to be dependent on this 464 and 489 area. Bulls, super bulls want to see us break through all this, get up to most likely targets for a wave 3, and hold these levels as support and move further up to the upside. If we're bearish and we think this is going to be some kind of C wave coming in, we're going to want to see this kind of taper off. Right now, it's a rocket ship out of the area of interest. But if we think it's going to turn into some kind of zigzag pattern, we want to see it slow down, potentially find resistance here at 464, maybe consolidate around this area, and then break up for the wave 5 of this 1, 2, 3, 4, 5 in a less sharp slope. Wave 3s tend to be the quickest and most out of control wave. As you can see, we have this level that needs to come back and be retested as it played as support in the past, and then we broke through it. So when we come back, I wouldn't be surprised if we got a little bit of a reaction. But again, ideally, if the Super Bowl is here, we're going to be moving up. And then the next level of interest, which is played as support, and then flip back into resistance, is up at 489. Those are the main levels to watch as we start pumping up. And if we want to get in or add a little bit more for a potential 4 or 5, I want to see these levels break and turn into support. So that's what I'm watching for as this continues to move up, if it does. If we end up rolling over, I don't like to keep adjusting counts to fit a bias, but I think there is still a chance if this is a completed zigzag down, we have a completed zigzag up, we could be going in for a flat, come back in, retest this level, retest our area of interest, our algo zone here, and then we still have a good convincing 1 or A, B, and then we'd send it back up. And having a flat in this position is on the bullish side if a wave 3 is to follow, as it doesn't happen that much. So far, MSFT is looking good. We haven't broken our level of interest and we've moved up to the upside. So we'll see how this plays out and what we're going to get. And as long as we have some clarity, we'll find something to play off of. With that, we're going to conclude all the updates. I'm going to move on to some newer assets that I'm looking at. Alrighty, here's the new asset I'm looking at is OKLO. You can see we got some pretty good Elliott wave in here with the 1, 2, 3, 4, 5 as an impulse move up. And I think we have a 3-wave move down in a corrective fashion in the form of a double zigzag pattern. So on the hard right edge, what I'm really looking for this week is a move back down into this area of interest, and then we get a nice pop up. We've been watching this asset in the Discord since about here. We're looking for a completed impulsive move to prove that this was the direction that the market wanted to go for the moment, and then looking for a possible correction in an effort to get in before a continuation. So basically, we were looking for our second entry. We had one impulsive move up correction. Now we're looking for that same kind of setup at the smaller degree. So this is what I'm looking for now. We did end up coming and rejecting from a level of interest, and there's some stuff here to the left at 71 area. And we came up and rejected from it. So we'll have to see if we can come down corrective, nice and slow, come back to refuel before we get to move back up. Keeping an eye on the pitchfork as well, as it can play as an early warning sign. If we end up breaking through there, it shows that there's potential loss of strength in that direction. I think the tight level that we're going to keep an eye on is $58. Got a little bit of support back. We have the fibs, and then we have this pitchfork channel line as well to keep an eye on. Again, if we do end up breaking down, I think I obviously don't want to see go past 58, and then this channel line down here would be another indicator. So you have validation at 53.94 is the final line in the sand where this idea goes kaput and we move on to the next trade. We've already come down and we've touched the 50 or we front ran it a little bit. So if we start popping up above here in an impulsive manner, I'll be keeping an eye on the retrace. So I think we have some clear Elliott to use as an anchor for a couple of setups. This is the basics for a C3 setup. We missed the first impulse, so we waited for the retrace. We didn't bounce out of AOI. Ideally, we still got an impulsive move back up in the direction that we were looking for. So now we're looking for that second retrace for a potential entry. And this gives us actually a lot less risk with a lot more reward at this point because we have our stop or our invalidation point for this idea at a closer area. So that's the main path that I'm looking for on OKLO. Nice pop up for a C3 setup is what I'm watching. Let's move on to the next one. All right, on the big picture on ARQQ, and as you can see, this has been pretty volatile up and downs last couple of years. Quantum computing is coming back into the foreground as the U.S. government just started throwing some money at quantum computing companies. The big one being IBM, so it might be coming back around for another cycle. So I'm keeping an eye on some of these assets as well. If you're an Elliotician, you kind of see what's sticking out. There's potential that we could be in a 1, 2, 3, 4, 5, and that we're completing down here for a completed impulse. Also, what we see here is we see that the volume has started tapering off, and then we're starting to see some volume come back in. I just want to show a bigger picture just to see where we are in the trend. Right now, the trend's down heavily. This would be on the more cautious side of the setup I'm keeping an eye on. With that, let's go ahead and dive into the smaller time frame. Down here on the 4-hour, kind of zoomed into that quote-unquote wave 4 that I was looking at before. So as you can see, the Elliott wave down kind of pops out at you. We have a 3-wave move up, 3-wave move down that reaches past the 90 percentile. And then we get a swift move up in the form of a C wave that sweeps the high of the end of the wave A. This is all textbook Elliott wave for a flat. Even in the slope analysis as well, the wave B has more hesitance to it and is less steep than the wave A, with the wave C being the sharpest move in the pattern. So it's checking a lot of boxes. Again, when we come and look at an impulse, we kind of look always to the left to see what we're dealing with. In this case, there's definitely a possibility that we have a flat pattern back here. So this could be heading further down to at least sweep this low in a form of a wave 5. So why am I looking at this? Well, there's 2 reasons. Right now, we have a good pattern here that we can use as an anchor. So what happens after we have a potential flat? We know we're going to sweep this low. And we know from the larger count that this could be a possible wave 4. What does that mean? It means that this could be completing here before we get a move up the upside to start changing the trend and moving to the upside. So this is a little bit further out than just next week, depending on how fast this price action prints. But something to keep in mind just based off the Elliott wave. I'm not sure why this one isn't up, so do your own research. I'm not a fundamentalist guy, but we have a clean pattern here, and we have a clean impulsive move down. So the bearish side of me is looking at this like it's an impulsive move down and a correction up. So looking for a swift move down to at least sweep this level here at 1191. At least that's what most likely happens when we're in a wave 5 as well. We're going to end up sweeping the end of the wave 3. This is a C3 setup. Since this is an impulse, either be a C, and that's the other side of the coin, or we're looking for a 3 if we're bearish. There's a possibility that something here is a bit funky and that we come down nice and corrective to this area of interest and we're bullish. So if you're bullish on the space and you think call is wrong and this is the bottom, we always have that C portion of the C3 setup. We can look for it to retrace to this level of interest here at 15 for a potential move up. So on the bearish side, I'm looking for a completion down past this low at 1191 with an invalidation of the idea at 1901 and a sus if we end up coming down correctively. On the bull side, we're waiting for a correction to complete here in the form of an ABC, with this being the wave C completion around the $15 mark. We get a sus level at 13, so if we end up coming down and breaking 13, then the idea for on the bullish side is looking a little sus, with an invalidation of the bull side at 1191. So that's what I'm watching for on here. Basically, the nerd in me saw a nice, clean, flat, and I'm building a trade plan and ideas around that. With that, let's go ahead and move on to the next one. For the last asset, I wanted to take a look at uranium. It's a lateral AI play. Uranium is going to play a big part in the nuclear, which is going to be bought up by all the AI companies and our AI overlords. So keeping an eye on this trade in a bubble. I think we have another nice Elliott wave pattern in the form of a triangle, a running triangle to be more exact. There are other counts that we can look at besides a triangle, but I think this is hitting a lot. We've got contracting price action on descending volume, and we have an alternate wave hitting the 618, which is something you want to look for. The only question mark here is really the D wave, but I'll go over that in a second. So we're hitting some attributes for a triangle, so I'm keeping an eye on that. Right now, the closest invalidation at 44.76. If we end up coming down, especially in an impulsive manner, which is the other kind of invalidation at this point, if we come down as an impulse, it clears this as being a potential zigzag. So that would be the primary invalidation point here where we get a little suspicious, with the final invalidation being down at $40 down here at the start of the A wave. 42 is just another level, another sus level here that has flipped from resistance to support in the past. So if we end up coming down again, there could be a spot to jump off, but it would not fit our Elliott wave thesis. We also are within the lips of the Vegas wave as well, so I'm liking this setup at the moment. But again, this pattern is really in a bubble. I'm looking at this pattern within a bubble here. We've got some attributes that are fitting the pattern I'm looking for, but the context to the left and to the downside is a little bit unclear. So the other pattern that I'm keeping an eye on here is the potential for a running flat as well. We have an A wave here, a B wave that hits the 105 percentile mark that it needs to hit, and then we have a potential diagonal move down here in the wave C. So this would be a running flat situation, and we have an impulsive move up, a correction down, and then we're going to blast up. So it all hinges on 52.79 breaking next week. So if this continues up and break this pivot, I'd be watching $58 or the $60 area, which has played as resistance in the past, and see how that kind of reacts. If we end up breaking above that, then obviously I'm going to be watching for this pattern to play out to the upside. So just to recap what I'm looking for here on the bull and bear side, the bulls want to see a move past 52.79 on Monday and potentially a break of $60 as well swiftly. We can get a post triangle thrust, or we can get continuation up again. If this is some kind of 1-2, we'd be sending it up as well. But we'll have to see if the post triangle thrust plays out after we get a break of the $62 level. The bulls want to see this play out nice and quick. They don't want to see 44 hit, 42 hit, and especially not $40. If that happens, then we're invalidating the count here, and we'd have to go back and reconsider that something else is going on. The bear side, we would roll over from here, complete an impulsive move down, cut it through $44.76 and $42, and to basically invalidate this structure. If we do complete in an impulsive manner down, we know we have a completed impulse, and we're looking for that correction back up for continuation down, especially this level here as it's flipped into support. If we do end up breaking down beneath that, then I'd be watching for that to play as resistance on the way down. That's just what I'm seeing for now. As always, I'm just rolling with the waves as I print. If you like this type of analysis, definitely check out some of my other videos and give me a thumbs up and subscribe. Also, you can check me out over on TradeDevils.com, and in the Trade Devils Discord, I'm posting a lot more in there. But that's all I've got for today. Trade safe, trade clarity. Take it easy. Later.